I still feel better about silver miners than silver. Understand at the time that silver was a speculative part of my portfolio, not an investment part, not a savings part, but a speculative part. And silver had given me everything I wanted. I'm delighted to say that I've done better in the silver stocks than the silver index. Perhaps 50 years of experience is finally counting for something. And so, in my own personal circumstance, my investment in the silver stocks has substantially outpaced the silver market and I guess the silver equities market too. How that works out to going forward in the near term, I can't say. What I can tell you is this. At the time I made the decision, it appeared to me that if the silver price went up, the silver stocks would go up too. If the silver price went sideways, the silver stocks were discounting $42 an ounce silver in a $75 price environment. So they could provide some shelter for me. And if the price went down, the same circumstance applied. Arithmetically, it was a very good speculation. As luck would have it, it turned out to be factually a good speculation for me, too. I continue to believe that the silver stocks itself represent better speculative outcomes than physical silver. Note that my own portfolio is different than many of the portfolios of the people who are listening, and they might want to organize their outcome differently. I have substantial physical gold holdings as a savings asset, so I don't need to own more physical precious metals of any type. I have substantial investment holdings and I have substantial speculative holdings. People who don't have precious metals in their portfolio, particularly people of a more speculative bent, should absolutely consider physical silver. In the part of my portfolio that silver occupied, it was less appropriate to continue to own physical silver than it was for me personally to diversify more money into the silver equities. Note, too, that some of the money that I spent from the proceeds of my silver sales went into physical gold, which hasn't done particularly well, but it was a savings asset. And 25% of it went into oil and gas stocks, which, for reasons I hadn't forecast, did extraordinarily well.
Well, we're definitely going to get into the oil and gas sector later. I'd love to get your thoughts, though, on the drawdown in silver and related equities today. Like I said, silver down almost 8%. Some of the equities, First Majestic, almost 9%. Pan American Silver also down around 7% on the day. You're a very long-term thinker. You often joke about how most investors can't even hold a portfolio over a long weekend. So I wonder if you could maybe give us some perspective. Is this just another day in the natural resource space?
Yeah, I'm a very long holder, very large holder of Pan American Silver. And you talk about it being down 7% in a day. I guess you need to say compared to what? I acquired my first shares in Pan American Silver at 50 cents with a 75-cent warrant. And the idea that that stock is down to me is laughable. It truly is laughable. To be honest with you, I haven't looked at a Pan American quote today. It's literally day-to-day performance an irrelevancy for me. I attend the Pan American quarterly conference calls. I study religiously their balance sheets and their income statements. I correspond frequently with their management team. The relationship between price to value in Pan American in 2027 is much more important to me than the price quote today. I realize that many people either aren't able to or can't afford to have the patience that I have, but I would suspect that the reason that I've been successful in public markets is precisely because of the rigor with which I do my work and the patience that I exhibit with my holdings.
Great answer. And I think more people need to be focused on the long term. I feel like social media is kind of pushing people towards a short term mentality. Now, I want to get onto silver's value as a strategic metal, but coming top of mind at the moment, because this is all over social media and we're seeing it live, bond yields rising significantly. The US 20-year and 30-year now over 5%. Many analysts pointing out that perhaps that could be a danger zone and perhaps we could see an unraveling of the credit market, a bond market crisis. Are you watching yields on government debt right now? Does it have you concerned? I would love to get your take.
I sure am. Jesse, more than others that at heart, I'm a credit analyst and I'm a banker. And studying interest rates is important for many reasons. The first reason is that it's an indicator of the interplay between government and the economy. You need to know that interest rates as they exist today are fake. They're manipulated by the government. They're not set by a free exchange between buyers and sellers. When you have a government like the US government, or the Canadian government for that matter, that is trying to artificially depress interest rates, which the US government is actively trying to do, and they can't do it, it's telling you something. It's telling you that inflationary expectations in the private market is overcompensating, or is compensating at least for the efforts to artificially lower interest rates, which is to say that the market is beginning to assert control over the long term, over the price of capital in the long term. That tells us that we need to be more concerned about inflation than the government would prepare us to be. It also gives us foreknowledge of things that might be happening in the economy. Rising interest rates increase the cost of capital, and as a consequence, often depress returns on capital employed. If debt costs companies more money, the amount of money left over after interest charges is smaller. So return on equity falls as interest rates rise. A second problem is that money disintermediates from yield-oriented equities to bonds, as the bonds have higher yields, which tends to depress equities prices over time. Most concerning at present, in conjunction with increasing gates, as an example, on private credit funds and weakness appearing in junk debt markets, is the potential impact that higher interest rates might have on credit markets and investor confidence. Jesse, I talked to you in an interview before about my greatest fear, which would be that higher interest rates or poor underwriting would cause a lack of confidence among retail holders of high yield ETFs. And if we had a situation where those high yield ETFs, which are very liquid at the structure level, but own highly liquid assets, if you ever had a run, which is to say, if ma and pa investors became concerned enough about credit that they began to liquidate the high yield ETFs, and those high yield ETF managers had to liquidate the illiquid bonds that they hold, then you're talking about a circumstance like 2008. I'm not saying that we're heading into 2008. I don't even think it's a probability, but it's a possibility. And the penalty for being wrong is extraordinary. And people need to take that variable into account.
Let's circle back to silver. The strategic element is being more and more recognized. Of course, we saw the U.S. adding it to the critical minerals list. Now China restricting exports as of the beginning of this year, as well as, according to Bloomberg, importing the most silver in a single month ever in March of this year. Why do you think China has such a focus on silver? Is this more of an industrial side, or is this monetary? Is it a mix of both? And do you think strategic demand for silver could be a major driver of the price up ahead?
The Chinese believe that it could. Silver is unique in that it's simultaneously an industrial material and historically a form of money. The Chinese government, to their credit, has been encouraging private ownership of gold and silver. Historically, well, not historically, but in recent memory, the communists didn't want folks to buy gold or silver because they thought that it competed with government bonds, which they preferred people to buy. The Chinese government now has enough confidence that they're trying to encourage citizen savings in all forms, including gold or silver, which is admirable. The Chinese understand, too, that silver is an important component in their industrial engine. The Chinese are the largest producers by a country mile of solar panels, which rely on the reflective properties of silver. Silver is also important in electronics and microelectronics, and is becoming increasingly important as a germicide in applications like water purification, and pollution control. The consequence of that, and the Chinese understanding that there is a supply deficit, which is to say we're using more silver than we're producing, I think has caused them to understand that they need increasingly large domestic stocks of silver, which they are increasing. Because America's industrial engine is substantially smaller, I think our government believes that they have adequate supplies of silver relative to the size of our industrial base, which is probably accurate given the shrinking nature of our industrial base. And I'm not a fan of government policy, irrespective of its American policy or Chinese policy. I'd prefer that they left our policy decisions to ourselves, you and I, so that we could express our own preferences. That notwithstanding, my preferences won't ever be expressed. Specifically, the circumstance that you suggest, I think, is more background noise than reality. The intentions of the U.S. government, as an example, expressed as policy preferences, are usually either exaggerations or lies, and I expect this one to be no exception. The statement by the Chinese that they were banning the exports leaves open the possibility of exports through official channels. In other words, if you are a private sector entity that's affiliated with the Chinese state, you get an export license. If you aren't, you don't. This is a form of rent seeking, the passing out of favors, that's as old as government itself. And I don't expect that this will really impact the free flow of silver into and out of China. It will just control who gets paid for it. Remember, Jesse, the true definition of an election from H.L. Mencken was that they're advanced auctions of stolen property. They conduct those auctions differently in China, that's all.
Yeah, very well said.